And today with me I have Mike Zimmeretti from National Life Group, Life of the Southwest. Good morning, Mike. How are you?
Good morning, Kathy. I'm great. I'm coming to you live from sunny, chilly Tampa, Florida, where it's in the 40s.
Yeah, that's about what we're going to have today, so I'm not too jealous of you right now.
Perfect.
Yes. Well, good morning, and thanks for being with us this morning.
Well, thank you.
Yes. So what do you have for us today to learn? What's going on
there?
Well,
I want to thank you and thank everybody on the call. If you've been with us over the last 3 weeks, we have had weekly coffee talk sessions aimed at a quick 20-minute overview of what's hot in the industry. If you'll recall, recapping, 2 weeks ago we talked about why living benefits on life insurance products were so hot and why they were captivating the marketplace. So we had a rousing discussion, and if you missed that, please call Kathy, and her team has PowerPoints and educational material that will walk you through those topics. And then last week, we did have some technical difficulties. I apologize for that again. Someone somewhere pressed the mute button, and we got a little late start, but we did get the job done. But we talked about life insurance planning in the business owner market and why that was so relevant, and why we're going to talk about a niche today of Section 79 in the business owner market. It is one of the most underserved marketplaces in the industry. And with the changes in Obamacare that are occurring this year, with dividend tax rates skyrocketing, with capital gains tax rates skyrocketing this year, and with agents looking for avenues to recruit and to procure additional lines of revenue and business, the business owner market is ripe because it's underserved. People used to call on them, Kathy, if you recall, years ago, to sell them health insurance and quote their health insurance and try to get them a better deal and save them costs. And, with the changes in health care and taxation, HMOs and different plans have taken over that, and benefit shops have kind of taken over that specific end of it and kind of pushed the agent out. So agents simply aren't calling on business owners anymore like they used to, and they really have not got succession planning in place or any type of life insurance or valuation of their business. So we covered that last week, and this week I promised to talk about a niche product or area called Section 79, which if you're calling on these business owners, this is a tremendous topic to discuss. It's very timely.
Hey, Mike, what is Section 79?
Okay, well, it's pretty simple. It's Section 79 of the Internal Revenue Code, or tax code as we call it, and it allows, and this is, please again, as I've mentored you over the last 2 weeks, simplicity is best. Keep it very simple. Simply stated, it's diverting corporate, tax dollars to provide benefits for employees and the owner. So Section 79, in its pure form, is really group term life insurance. And what's interesting about it is many business owners have implemented it now with their health insurance plans or with other type of benefit plans that they have, provided for their clients. And it provides life insurance for their employees at a tax leverage benefit where the corporation can write off 100% of the benefit and provide these benefits at no cost to the employees.
Wow. How does an agent explain that to a business owner?
Well, that's a great question, and I think one of the best ways to do this is to really set the table first. I think that's the most incredible way to do it. Is set the table first and talk about the virtues of life insurance and living benefits, and talk about the new kind of life insurance and where we're going with this industry, and then say, very simply, there's two ways to pay for this, Kathy. If I was approaching you, Kathy Elkins, as a business owner, I would say, after I had discussed what I provide in benefits, I'd say there's two ways to pay for this, Kathy. We could use your checkbook with after-tax dollars, and you simply write a check on a monthly, quarterly, semi-annual, or annual basis, correct? However, you've indicated you're a business owner. How would you like to provide the same benefits for yourself and your employees using the corporate checkbook or the business checkbook? And then if that wasn't good, good to be true, good enough to be true, you can take 100% deduction as a business expense for those premium dollars that are going to the life insurance carrier. So let's just kind of step back and kind of look at that. So what does it do? Well, there's an unknown codicil in Section 79 that allows for, and forgive me for kind of bouncing around here. It's still kind of cold in Florida, and I'm in a fog. But getting back on track, the term benefits are usually $50,000 a group term. We've seen it attached to health plans across the country corporately. But if you examine Section 79, there's little known codicil in there that there's actually a provision for permanent types of insurance plans and larger than $50,000 a group term. So how would I explain it? To answer your question succinctly, how would I explain it? 3 buckets. The first bucket would be pretty much 95% of the rank and file of your employees will love the $50,000 a group term because it costs the employees nothing, and it's relatively cheap and inexpensive for the business owner to provide it, and then, of course, they write off that premium 100% as a business expense. The second bucket would maybe be for mid-level management and maybe encroaching on high-level management where you can get group term in excess of $50,000, going up to $250,000, $300,000, $500,000 a group term. Now, that portion is also 100% deductible to the corporation as a business expense. However, the amount over $50,000 of group term, so let's say you purchase $250,000 a group term on a manager, $200,000 of that would be taxable at a Table I rate, which is pretty inexpensive. That's a table provided by the IRS. But the third bucket is where the business owner gets extremely excited because there's a permanent life insurance product that top-level management and ownership can partake in and fund, and that would, in this case, be a permanent indexed universal life product. And why that's so exciting, Kathy, is because it's a 5-year program, and money can be put into this program from the business checkbook over a 5-year period because it's set up as a 5-pay, and that's the only way to do it currently. And the employees and the business owner own this life insurance plan, meaning they have all of the living benefits attached to it, being able to take money out on a tax-free basis in retirement, and of course they own their own life insurance program. So it's not corporately owned where the corporation really gets all of the benefits.
Wow, that's good.
Does that make sense?
That makes sense to me.
Now, I know when you and I talked last, you said, well, how come there are only 2 carriers in the industry that run with Section 79? And we kind of joked about it, and I said, well, our competition is Pacific Life, or PAC Life, as they're affectionately known, and they're a great carrier, and us. And why is that? Is it such a niche that it's not lucrative and other carriers aren't concerned? Well, prior to 2006, all carriers were involved in Section 79. You could use any type of a UL or IUL product and fund Section 79 with it. However, the IRS came in 2006 and introduced a new valuation model called fair market value. And overnight, if you didn't have a specially constructed IUL, the amount that would be taxable for this benefit to the owner for the permanent life insurance need rose to like 70, 80, or 90%. So what we did in PAC Life is we created a special product taking into account these fair market valuations so that when money is put into a permanent IUL on behalf of the owner, only 60% of that money is personally taxable to the owner, not 70, 80, or 90%. And, of course, you have your 100% write-off to the business as a business expense. So when we look at all this, we say, well, why are you better than your competitors? Well, we've created this special product, but we also have our living benefit story, terminal, chronic, and critical illness. And then we also have our lifetime income benefit rider on this program, which provides tax-free income guaranteed for life. So, again, in our conversation, Kathy, you said, well, then, agents on our call today, give me 3 reasons why they would want to write Section 79. Well, other than the obvious of being an underserved market, and believe me, I've been in this business for 25 years, it's a huge differentiator. you want to differentiate yourself from the other guy or gal. You want that business owner to say, hey, this advisor is different. They've got some unique ideas. And, people are throwing around captive insurance plan ideas today. And because only 2 carriers run with this Section 79 now, a lot of people haven't heard of it. So the big 3 reasons why you as an agent listening to this coffee talk today would be interested in, well, number 1, there are special laws in effect with Section 79 that under 10 lives, if you have a small group like a chiropractic clinic or any type of an organization, and they have 10 employees or less, we are not allowed by the IRS to underwrite those employees. So here's reason number 1. They actually can get up to $3 million of death benefit in an IUL in a 5-pay scenario without having to have a paramed and submit blood, urine, and we're not allowed to send a paramed out there to collect those fluids, and we're not allowed to ask for APSs from attending physician statements, et cetera. So it's a great way to provide no muss, no fuss underwriting, because there is none really. We just look at prescription database and we look at the answers on the application. It's not guaranteed issue. It's accept, reject, but it's called non-fluid underwriting, and we can't go into asking physicians for reports. Secondly, it's a great tax write-off for businesses that may be starved for tax write-offs. Secondly, some businesses may have wanted to do other tax-deductible benefit plans under the qualified plan hat, but those plans are costly and you need ERISA plan documents, and it gets to be, crazy and complicated, and business owners are too busy. They're too busy, worried about what keeps them up at night, namely keeping their business running. So if you can provide a tax write-off and divert tax dollars to, the business owner and provide benefits at the same time, you're a hero. And then being able to go up and get up to $3 million of death benefit without any underwriting is amazing in today's life insurance times. And thirdly, since we're not a non-profit entity, target commissions on this IUL product for Section 79 are generally 2.5 times higher than a regular commission on a regular IUL. So the average Section 79 sale is $80,000 to $90,000 of premium. So you're looking at, you could be making a significant commission as an agent by going in there. And you also get commission on the group term as well. Kathy, back to you. Well, I think we lost Kathy. I hope all of you can hear me. This is Michael Zemmeretti, RVP with the National Life Group and Life of the Southwest. I think what we'll do is, in wrapping this up, I know one of the questions Kathy was going to ask me is, what do we do at the National Life Group to support Section 79 sales? And essentially, there are a lot of things we do. Once you contract with us, we will provide you with access to our National Life Group University. We have PowerPoints, PDFs, agent guides, prospecting materials. Number
I
2.
Apologize. Oh, Mike, you cut off for a second.
Okay.
We had no idea what happened to you.
What's that?
I had no idea what just happened to you. You just cut off.
Oh, I did.
You did. You were gone for like a good minute. So I don't know what happened.
Oh, no, I'm so sorry.
I wasn't touching my computer, so I don't know what happened.
Well, I've been sitting here on my headset. Well, tell me where we left off, and I'll recap what I just said.
You're just starting that next piece after you told us the size of the cases. You just talked about 80 to 90,000.
The 3 reasons why someone would want to. Okay, so again, kind of recapping why you as an agent would want to really dive into Section 79 planning. You can provide up to $3 million of death benefit for your clients. And what's interesting is the IRS will not allow us to underwrite groups of 10 lives or under. So it's not guarantee issue, but the IRS says we can't ask for attending physician statements. We cannot draw blood or any other type of fluid. We can only go to MID and give the client a quick call with a personal health history pertaining to the questions on the application. So that's very desirable because it's very quick, no muss, no fuss underwriting, up to $3 million of death benefit. Number 2, you're providing a tax write-off of 100% as a business expense to the business owners who are looking to possibly divert tax money from Uncle Sam and put it in their own pockets as benefits and for their employees for employee retention. Secondly, this is much cheaper than a qualified plan because the only fees associated with this is construed as a non-qualified plan, and the vendor fees are only about $350 for administration. But what's really cool about it is that you don't have to pay these exorbitant fees for qualified plans, establish a plan document, and worry about ERISA guidelines and discrimination. And there are some discriminatory situations with a Section 79. You can leave out part-time employees, unionized employees, and people that have not been with the company. Under 10 lives, you can exclude people that haven't been with you for 6 months. Over 10 lives, you can actually exclude employees unless they've been there for 3 years. So there's a lot of flexibility in these plans. And thirdly, and very importantly, the target commissions on these particular products are 2.5 to 3 times higher than they are for regular life sales. So the average, if you would ask me what the average commission is or target premium on one of these Section 79 cases, you're looking at about $80,000 to $90,000 of target commissionable premium. So you can see that is very, very lucrative. So Kathy, I know you're going to ask me the next question is, well, what do we do to support agents that want to get into this very lucrative market and underserved market? And there's a lot of things we do. Once you're contracted with us through Premier Life and Annuity, you can access a lot of training material on our National Life Group University platform. We provide PowerPoints, PDFs, agent guides, prospecting materials, how to actually, we have letters, we have emails, prospecting emails, et cetera, and scripting on how to approach these business owners. Number 2, and I think this really sets us apart in the industry, is we have an advanced sales desk with an actual dedicated Section 79 attorney by the name of Matt Ryan. He's available for free. So if you want to call them, and I got to tell you, it's really interesting because you may think, well, I'm not really in that marketplace, but then you start looking at your life and you say, gee, I play golf with business owners. I go to church with business owners. I have relatives and neighbors that are business owners. Why don't I ask them what they're doing for their planning and see if I could take what they're doing and give them a better situation, give them some better tax breaks, and provide better benefits. But I don't know a lot about some of these plans that I may run into that compete with me. Well, you have the ability to go to Matt Ryan at the sales desk and say, hey, I've got this organization and they've got 15 employees and here's what they do, and can I fax you or scan a document of something they're doing now, and can you look it over and advise me is this still a good plan, or can we do better? And what's really cool about this, folks, is you can layer a Section 79 in over and above what a current business owner is doing. And that could be key, because in your conversations with a business owner, they may say to you, do you have any options for me? I'm maxing out every conceivable plan my last financial advisor gave me, and I'm still writing a big check to Uncle Sam. Do you have any thoughts or ideas? And, of course, Section 79 would be the answer. Thirdly, we have third-party administration that will help you implement these plans. So again, I dare say, I got to hold my breath saying this, it's not this easy, but it is, if that makes sense. You bring the relationship to the table. We hold your hand, and pardon the expression, but we do hold your hand through the process, provide you illustration and counterpoints of how to present this program. But then eventually we put you in touch with a third-party administrator who has to administrate the plan. And again, they charge about $350 to the business to administrate these plans. They actually help you present it, and they babysit it for a 5-year period. So you really have a lot of support and background. And of course, you have myself to talk to bounce some ideas off and quarterback some of these ideas, and the fine life team at Premier Life and Annuity. So back to you, Kathy. I think that wraps up my discussion on Section 79. I'm sure you have some questions, or maybe some of your agents do.
I do. I have Michael Campbell, and I'm going to unmute him real quick here.
Okay.
Michael, are you there? Michael, are you still there? Okay. His question is, what if the business owner is not insurable? Can we still utilize Section 79 tax benefits by purchasing an IUL based on the spouse's life?
Well, that's an interesting question. As long as the spouse is employed by the business, this is strictly a program for employees. So if that spouse held a position in the business, so to answer the question succinctly, the uninsurable, unfortunately, is uninsurable. And that's a great question, because as I say to anyone that is approaching any type of client for any life insurance planning, if you start talking about the wonders of living benefits and tax-free income and income guaranteed tax-free for life, and you haven't got a handle on their health, and then you pull out the application and you find out that the client is uninsurable, you're headed into dangerous waters, because you're taking away something that somebody was really excited about getting, and then they sometimes shoot the messenger. So these plans are purchased with health, good health, and of course you have to have monetary support to pay the premium. But they really are first and foremost for insurable employees. So make sure that the person making the business decision owner or decision maker, hopefully is insurable, because if they're not insurable, then this plan probably isn't going to fly, because really the play is 95% of the benefit is really for the owner's benefit, because a lot of the rank and file are going to gravitate to the $50,000 a group term, because they may be living from paycheck to paycheck, or they have their own plans in place, or they just don't want the added burden of taxation of taking on an extra benefit, at their wage level. So hopefully that answers the question.
Okay, I have Kevin Wilson. Yep, we got several here, Mike. So Kevin Wilson, good. I just unmuted you. Are you still there?
I am. Can you hear me?
Yes, we can hear you. Go ahead and ask your question.
Yes.
Hi, Kevin.
Yeah, question. Hi, how's it going?
Good.
To you guys. Question, what market segment would you go after? Because, again, this is a market, as you stated, was very well underserved, which I have very little experience in. So to apprise myself of the product, but what market segment that you suggest to actually target or go after?
Okay, great question. Thank you, Kevin. I kind of got cut out there with our audio. One of the things about Section 79 that is good and bad is that it's really carved out for C corporations, for people that derive W-2 income from a corporation. So, but that does not knock out people that are LLCs and partnerships, et cetera. And I recognize there's a lot of small business owners that are set up as subchapter S's or LLCs or partnerships. But there are affiliation rules that the third-party administrator I mentioned can jump onto. And what I'll give you a perfect example. We had a radiology organization in Tampa that was quite well known in the Florida area, and they were set up as a partnership. However, their offices and their radiology equipment was held in a C corp, where they held their real estate and their equipment. So there are different things to do that. So to answer your question, I would focus on the C corporations in your area, or actually, I think generally speaking, the best advice I could give you is if I were you, I would go out in your community with your business card in hand and a brochure, or just mainly your business card. And it's all about relationships. And I would introduce yourself to the business owner, try to find who the decision maker is, and say, look, I just came by. My name's Mike Zemeretti, or Kevin, and I'm a financial advisor, or I'm an insurance agent in this area, and I specialize in working with business owners on a variety of items. And then you stop and you say, do you have a moment to tell me about your business? That's the key. In the 25 years I've been doing this as a wholesaler and agent, people always ask me, Mike, what do I say? How do I do it? How do I get the train to leave the station? I'm nervous about that. And every time I talk to a very successful practitioner or a estate planning attorney or a business planning attorney, they laugh and they say, Mike, you got to keep it simple, just like you're meeting somebody playing golf. You ask them what they do, and you say, well, tell me about it. Just like if you're working with a senior, and you say, oh, are those pictures of your kids? Tell me about them. About an hour later, after you're quiet and you're listening to the story, you really get a lot of information. And I've sent Kathy Elkins and her team at Premier Life and Annuity a number of business-related fact finders that I would suggest you read, because here's what I would do. I'd read the fact finders, and I'd get familiar with the questions I need to ask and know from a business perspective. So when I approach a business owner and I ask them, tell me about your business, and they tell me, then my second question is, tell me what keeps you up at night. What worries you as a business owner? And then you listen to that. And you should be making mental notes, or maybe you're making notes on a legal pad. And then they may say, well, I really haven't got much more time, Kevin. It was nice meeting. I said, well, I'll tell you what, I'd like to come back and talk to you further because your fears as a business owner and your needs are no different than everybody in the community. And I want to share with you some strategies that are lessening the taxation burden on the business owner and diverting it to giving them benefits, giving them living benefits, giving them succession planning benefits, death benefit, and accumulating retirement wealth, tax deferred, yet having the ability to take it out tax-free on the back end. Every business owner is very astute about the end game is I'm either going to sell my business and live off of the proceeds of this business in retirement, or I'm going to stay in this business and sell it to my kids or to my partner. But if I can use my business and the corporate dollars to fund a supplemental retirement program for myself, and I can pull that money out tax-free in retirement, I want you to come back and sit down and talk to me. So, Kevin, I hope that helps you out a little bit.
Kevin, any other questions?
No, that's it.
And Kevin,
Thanks,
you know,
Kevin.
maybe part of your question was, who's a typical fit for a Section 79? My gosh, any type of white-collar law firms, small firms, large firms. We can go down to One Life professional athletes, dry cleaners, people that own stores. We've had trucking companies, oil drilling companies. I've had chiropractic offices, radiologists, you name it. Any business concern that's either a C corporation or can affiliate to a C corporation that is looking to, you know, and there's a lot of, I'll tell you what, if you didn't sit in on our previous discussions, when I did the piece last week on business opportunity planning, 70% of business owners have no succession planning in writing and probably don't have a will or a trust talking about what would happen if they died with their boots on in the business, nor have they evaluated their business to know what it's worth should they want to sell it to their partner or sell it to a family member or give it to a family member. So there's a ton. And why we're talking about Section 79 today is to give you yet another conversation piece. And, Kevin, I'm glad you asked that question because I could do a whole WebEx for an hour. But what I want to share with you is Section 79 should be put in your basket or your briefcase of concepts, ideas, and solutions. What you really want to do is go in and ask these owners who they are, what they're doing, tell me about your business. Have you done any type of planning? And look at some of the fact finders we've sent Kathy Elkins, and then go from there and only use Section 79. Just like you being a doctor, it's a medication that we don't want to write a prescription for everybody, but in a lot of circumstances, Section 79 can be very, very appropriate, and it's a great conversation starter. You may start with that conversation and divert to something else and find that you get into bigger and better things like a defined benefit program or a defined contribution plan or a buy-sell, and our advanced sales desk can help you with those ideas, or layer them all together.
You also stated that this product is for employers or for employees of 10 or more?
Well, it can be all the way down to One Life. So what I was saying is the IRS, for some strange reason, has differentiated 10 or more versus 10 or under. And on employees that have 10 or businesses that have 10 or less employees, insurance carriers are now not allowed to do formal underwriting, meaning they can't send a paramed to see them. They cannot have their blood drawn or their fluid examination for anything. We cannot write to their physicians and ask for attending physician statements. All we can do is go by the health questions that are on the application. We can look at MIB and the Medical Information Bureau to see if there's any data there, and we can do a personal health interview where a home office employee calls, the applicant and verifies the answers on the health application portion of the life insurance app. So it's an accept, reject. It's not guarantee issue, but it's accept or reject. But it's a very quick and easy on 10 lives or under. But because we cannot look under the hood, so to speak, and underwrite formally, we restrict the death benefit to a maximum of $3 million. But on groups of 10 or more, we do full underwriting, and you can go as high as what the business owner would like to do, and it's usually a formula of their annual compensation, et cetera.
Got you. Thanks.
Oh, you're welcome. My pleasure.
Thanks, Kevin. We got a whole bunch more questions. I'm trying to get to everybody here. Problems with the questions are just so tiny.
Well, I'm in no hurry. Our 20 minutes is up, but I'll sit here as long as if people want to stay on the line and ask questions, I'm all for that.
Okay. I have Dean Pearson. He's got a question. Dean, can you hear us? Dean, are you still there? Okay. Dean's question was, discuss the tax deductions, please. If this is tax offsetting, or is it premium, a deductible business expense?
It's a deductible business expense. Yeah.
Okay.
And I'm not a tax advisor, nor are our attorneys on our sales desk. However, the folks that you will work with in these plans, and this is what's so exciting about this, is you work with a TPA, and I'll give you a quick scenario, Kathy, and I think this will whet a lot of folks' appetite. On one of the plans we just did at the beginning of the year, last year, we went in and do 2 Section 79s on 2 sisters that owned hospice care centers that had less than 10 employees. And they both did Section 79 planning. And then the third-party administrator had such a good rapport with the tax accountant that the tax accountant, in their weekly conversations implementing the plan, said, hey, can you tell me how this differs from a 412 I program, a 412I? And our TPA said, well, it's now called a 412E3. The IRS just changed the tax code number, but it's essentially the same thing. Why do you ask? Well, there was an agent in here 2 years ago that wanted us to enroll in this 412I and brought in all these illustrations, and everybody got all excited about it. But when we started to dig deep and ask a lot of questions, the agent kind of got cold feet and disappeared. He didn't return our calls anymore, so we just forgot about it. But the owners liked it. So our TPA said, well, listen, if you'd like me to look at your overall financial situation, you can do a 412E3 in conjunction with these 2 Section 79s that we're implementing and save the 2 sisters even more tax money and give you even more benefits. Well, when it was all said and done, they did that. And the agent who brought the relationships to the table earned in excess of $400,000 in life commissions and annuity commissions. And the TPA did all the work over 3 months. It took about 3 months to put. So, that doesn't happen every day, but, you're opening up. Yeah, you're opening up and looking at different situations, and you're getting a lot of leverage with a lot of assistance. Next question.
All right. So I have Norman Aveline he asked a question here, and I think we already answered it. But Norman, are you still there? Do you have any more questions? His question was, can we target 10 employees or less? And that was said. We can go down to 1 employee, correct?
Yes,
okay.
That's correct.
That was his question. So Norman, do you have anything for us? Okay. I have Sean Seaman. He asked a question. Sean, are you there? His question was, can I get information sent to me for my own reading? Yes.
Absolutely.
We'll send everything out
Kathy,
to you.
I sent you those
Yep.
PDFs and things, so Kathy, you could do that.
I can go ahead and do that, and let me check to see if there's any more real quick here. Just double checking if there's anything else in here. What was that one on? This is offset. It did that one. Sorry, the questions are so tiny.
That's okay.
Okay, so I don't have a microphone on.
While you're looking, let's talk about the positives and negatives, because someone might say, well, Mike, you're talking about how rosy this is. What's the downside? And the downside is you want to make sure that the business owners that you speak with have the ability to pay these premiums over a 5-year period. So as business owners go, or businesses go in this economy and in the future, you kind of have to sit down and look at this and take a hard look and say, is your tax situation going to remain stable, forecasting over the next 5 years, or is your business up and down financially? One year you're profitable, next year you're in the red. You want to make sure that if you implement or look at implementing a plan like this, that you have a stable taxation picture where you have a company that is making money every year and paying taxes every year, or looking at paying more taxes in the future, and you want to make sure they're not strapped into paying a premium for the next 5 years in a commitment that might, put some pressure and overburden them. Kathy?
Okay. All right. So got another question here. So, Mike, you confused me. This is from one of our agents out there. Is this only for a C Corp or not? You mentioned an LLC partnership that can take affiliated with a C Corp.
Great question. You have to have
a minute on that again.
To implement a Section 79, you must have a C corporation. Now, when people hear that, they hang up and say, "Well, most of my clients are subchapter S or LLCs or partnerships, so they can't do it, right?" Well, no, not necessarily. If your client is a partnership or subchapter S and has a significant tax situation, and they're soliciting your help, with the help of the third-party administrator, you may be able to create an affiliated C corporation, whether that is another C corp, another corporation aside, or a corporation aside from the partnership to handle payroll or some aspect of the business. It has to be affiliated with the business. And again, if you heard me with the radiologists that we had, they were set up as a partnership. However, they already had an affiliated C corporation that they didn't even talk about until the TPA got underneath and started looking around. They said, "Oh yeah, well, we created a C corporation to hold our real estate and to pay our payroll and depreciate our X-ray equipment and our MRIs." So that's what you have to do. So yes, there is a situation where you have to have a C corp at some point. However, it's a great conversation point, because if that's not going to work, you still have brought up the need for succession planning, for key man insurance. And remember, there's two ways to do this. You write it with a check with after-tax money, or you write it with a check from a business account. If it doesn't work out from the business account, and this is not right for them, then you could just write them a lucrative key man or buy-sell program with our help, with after-tax dollars. And, the result is the same. You've done sufficient planning for the business owner, and of course you've provided income for yourself as an advisor. Kathy?
Right. Okay, one more question here. When insured this way, is the benefit to the owner beneficiaries still tax-free?
Yes,
I think
they are.
So.
Nothing changes here other than here's what happens. The money that goes into the permanent IUL is taxed at the individual level, but they don't have. For example, let's look at a scenario, Kathy. If I owned a business and Kathy and I were partners, and at the end of the year we had a bunch of cash, we could say, well, we're going to bonus each other as an executive bonus, each $100,000. And Kathy would look at me and say, yeah, but we had a really good year this year financially. We're going to have to pay taxes on that whole $100,000 as additional income. So how much of that are we going to actually save? The business does take a deduction as a business expense at 100% of that executive bonus, but Kathy and I are going to get killed taxation-wise. So Kathy says to me, her financial advisor knows about a Section 79 planning concept where that $100,000 could be sent directly from the business to a life insurance product, and the business will take their 100% deduction, but we would only pay taxes on 60% of that $100,000. So that would be quite, and then that money goes into the life insurance policy, that $100,000, and grows tax deferred in this indexed UL, and I have my living benefits, and then I have my growth that in retirement, I own that product. I name my own beneficiaries. The corporation does not own it. The only thing the corporation is doing is sending the premium directly to the insurance carrier and taking a business expense tax write-off for it. That's all they're doing. And then we, as recipients of the benefit, will pay taxes on 60% of that premium. And then after 5 years, it's just growing along. And if the company wants to start another one, they can. If not, they just do one. And at the end of that period, when you go into retirement, you own that policy. It's entirely portable. So
Nice.
The answer is yes.
Wonderful. Okay, well, if anyone has any more questions, you can reach us at Premier. Either call myself or call Mark, or just call and ask for a life marketer. You can reach us at 1-800-365-8208. We're here to help you with any quotes that you may need, any additional questions on this webinar or future, Life Weekly shows or other future Life Weekly shows we have. Mike, you'll be joining us again next week on our fourth Life Weekly session. And I think you're talking about premium financing. Is that right?
Correct. And let me just kind of set the stage for that. The premium financing market has become very hot again. And why is that? Is because interest rates are really low to borrow money. And what's premium financing? We're going to tell you next week. But some of your business owners may say, hey, Kevin, I don't have a C corporation, and I don't want to do a Section 79, or I can't do a Section 79, but I want to fund a $5 or $10 million life insurance policy, but I don't want to use my money. I want to use a lender's money because rates are really low, like 2 or 3%, or maybe I can get it for a 1.5 or 2%, and then I'll put all this money in over a 5 to 10 year period because I don't want to use my working capital. I want to keep that money to keep running my business. And the result is the same thing. At the end of the time period, you pay the loan back by taking a loan out of the cash proceeds of your incredibly accumulated cash value, and now you have this retirement vehicle for you at the end of the rainbow. So we're going to talk about how that works next week.
Wonderful. So you already emailed me, and I apologize. I'll double-check my email, but I'm pretty sure I have it. All the training materials from today and the PowerPoints today, so we'll share that with all the agents on Section 79. And can you give us your information? Because a couple agents are wanting to call you to see if
love
to
to.
Started.
Well, Mike Zemeretti, the last name is spelled S as in Sam, Z as in Zebra, E-M-E-R-E-D-Y, and I'm in Tampa, Florida, area code 813-962-5933. Again, that number is 813-962-5933. Or if you want to email me, I'm at mzemeretti, that's M as in Mike, S-Z-E-M-E-R-E-D as in David, Y, at nationallife.com.
Wonderful. Well, thanks, Mike, for joining us, and we will talk to you again next week.
Okay, everybody have a great week and stay warm. Thank you.
Thanks, everybody. Take care. Have a great day.
Bye now.
Bye.